fantastic.
Oh.
I mean, I don't know about you guys. Now I'm thinking that that Wednesdays are becoming your favorite days, just because you get to see my face, and at least I got Ben laughing. That's good.
Yes. Yeah.
How we doing today, guys? Are you feeling? What's the sentiment out there?
Feeling better.
Good.
Hard to say.
Hard to say. All right.
What's going on, Gaines?
Hey,
how are you?
Not too bad. I'd say probably like cautiously optimistic. Is that fair?
I would think so. Yeah.
Okay.
I don't know. It just seems like for a while now, and it's certainly not this channel alone, but a few other sources that I follow, it's just been like calling this collapse starting to sound kind of Cassandra-like for so long, and it just never quite materializes. And in the meantime, things just like slowly grind up. I mean, we all know it's coming at some point, but it's been, or no, we all know. No one knows anything, of course, but yeah, like you feel it in your gut, like it's just this impending thing that just never quite materializes.
Yeah, I think that's more than fair. It's one of the things that really caught me off guard was back in September and October when we're waiting for the election, and staring at this report that says markets don't really go down in election cycle years in September and October for the seasonality. And I'm like, well, I mean, we've been up for so long, and we had that big Japanese yen carry trade blow up thing in August, and I didn't really want to believe it. So that still, even though how long you've been doing this, your bias still kind of creeps in, and it's one of those things that you wish that it wouldn't, but it always does. So typically you call that climbing the wall of worry, and it's correct. Markets typically go up more than they go down, but when they do go down, it's usually pretty quick, and unless it's like a more of a protracted sort of bear market. And I'm really liking the comments, like especially like Don, I know you're on the call here. So some of the things that you're throwing in there about prior trading cycles and things like that, that's that's sort of that experience that you can't really buy, like the people contributing for that, I think is great. So keep that stuff up, you guys. But in general, I think what's really what's kind of standing out to me is that for some of the reasons I listed below, or not below, but some of the reasons that I listed with the bond market, it's really causing some big problems. And if you guys remember, maybe like 9 months ago, maybe a year ago, I know some of you weren't in the service back then, but a while back, I had been mentioning that a lot of these like regional banks have a lot of these U.S. bonds that are yes, you can swap them and things like that with the government, but the government still has to absorb that debt somehow, some way, so it doesn't just get repatriated or reissued, whatever. So these bonds are all on these banks' books, and these are all unrealized losses. So when the rates creep up, you start to hear these alarms that get sounded by these pension plan managers and people that are managing, let's say, for example, like a stable growth fund. So let's say you have $1 billion in a stable asset value fund, and you have to essentially guarantee this 1% to 2% return on a bond, but the underlying asset is devalued 30-40%, and that's a big concern. So it's like you're seeing a lot of these after effects on the surface, which is just equities climbing the wall of worry, that kind of thing. And then you also see the flip side where the market internals are starting to break, and you can't really see that with just normal price action, but you can start to see it now where things like an auction are gonna kick something off the edge here. So sorry, 1 second. My dog just jumped in. Sorry, it's gonna be very annoying. Sorry about that. But yeah, so I guess to kind of summarize here, I'll show a chart, but just overall, what's happening with rates in the bond market is really starting to sorry again, it's really starting to perpetuate through the system, and anything north of 4.3 for yields is really going to start to squeeze those short-term like 2-year 3-year treasuries, and at least, sorry, like when you're looking at the 10-year yield, the other kind of drags the other ones with it. Start to see mortgage rates, what was that, 5.1% today, something like that. Yeah, not good, right? I mean, to be fair, a long time ago, 5.1 would have been an awesome rate. But, once you go from, the high threes to, something like that, it doesn't go unnoticed. And, we have this narrative that there's, we're business as usual, everything's kind of going up and everything's fine. But it just kind of screams that like classic bear market rally. And one of the things that, I'll start to share some charts here. But one of the things that has really kind of stuck out to me has been this, has been the 200-day moving average here, where, the 200 and the 50. Now, yeah, it's crossing over here, but I think that's a short-term kind of thing. Like you can't, you don't typically see something like this where you see just a big jump and a big gap over it. It's kind of like cheating from the bulls, like you kind of gap over resistance, but the resistance is still there. You still have positions. Yes, bears will have to cover, and that can usually accelerate, a rally upwards. But you also need to remember too that the VIX was so high. Let me pull this up. The VIX was so high that the dealers have to take the opposite side of the trade. So the dealers were so far underwater with all the longs that they had. It actually doesn't really surprise me that there's been, kind of a slow, steady upward climb, just because there's so much risk out there, especially with all the, all the options volume, all the gamma that the dealers are responsible for. Like it's kind of a scary sort of house of cards, and that's kind of why you see these, why, at least in my opinion, you can see sort of these protracted rallies that last just a little bit longer than we think they're going to. But on the surface, though, we can, I think I drew this trend line back a couple of, what was this, a couple days ago, a couple weeks ago. So we had, a breach of this trend line. And typically when you see like a head and shoulders pattern like this form, you can see varying degrees of what that retracement would be. And if you look at something like, let's say like 2008, if you have some of that data, you can take a look at that. And it kind of maps relatively close, but the one part that we're missing from that 2000, I'm not trying to scare anybody, but the one part that we're missing from that 2008 chart to, kind of map onto this is really that next piece down, where then you get this sort of stair step down. And I'm not saying that that's going to happen. Okay. Every time we do these webinars, like I don't want it to sound like I'm just mega uber bear. But what I do want to convey is that there is a significant amount of risk where I don't see any like crazy upside unless there's a catalyst for it. And if we're talking about how high these or how high this is retraced, typically you can see 35-40% rallies with with these sort of bear market things, providing it is an actual bear market. In hindsight, we'll be able to figure that out. But the one thing I wanted to stress is like there's two real bullish scenarios that we could see materialize here, and I just want to make sure that like we're prepared for it, right? So if you guys are net short, there are ways and things that you can protect those positions, and you can try to get in front of that. So the one thing that kind of sticks out to me here on this chart is that this sort of ABC retracement, it kind of stopped like right before, and sorry, these levels are not like super precise. This is just like a webinar chart that I have. But this sort of ABC here, it kind of resembles a flat at this time. And I don't have a screenshot of it right now, but I'll post something in chat, maybe tomorrow with the opening statements, however you want to say it. But pretty much, I mean, you typically see extension levels hit on these major sort of retracements. And what I'm a little bit nervous about is that this is kind of like a fake out almost, where you might see this as a wave 4, it might head down here, and then you see a final wave 5, and maybe to test a little bit higher up. So that's a possibility. And at this point, this is very clearly either, I mean, I think personally it's a C leg up. Anytime you see some, you can't see that. Anytime you see these these, rallies up into space that they're pretty strong. They're either a C leg or a wave 3. And there's really not that much of a differentiating factor between a C leg and a wave 3, except for the Fibonacci levels that they exceed. So what we're looking for here to validate the bullish case, in my opinion, is if we do see that sort of down move here, where let's say, let me just draw it. Let's say it kind of heads down here, then bounces back up, and then we get a higher high, but it's beyond. Let's say it goes up to like slightly higher than that, maybe like 22,000. Then yeah, I think this is for sure a wave 5, and sorry, not wave 5. It's more of like this would be. I'm sorry, I don't want to get tripped up here. I have to understand that not everybody, savvy on the wave theory and stuff. So if I'm going a little too fast, so I like to try to catch myself. Anyways, sorry. If we do this sort of, see some sort of correction like this, where it's just real shallow, maybe only a couple percent, then it can set up like a wave 5 up here. And then that would kind of change the counts a little bit, where this might be like your wave 2, and then your wave 4, and then your 5, which could either end up in a new high or not. And that could still keep that sort of flat corrective pattern where it's like, it's called like a 3-3-5, where, you have your ABC, which is a 3 count, and then your longer term B wave, which is a 3 count. And then you have this sort of, 5 wave down for a flat. I know Fred Frog's a big fan of the flats. I think that they're relatively easy to forecast. As long as these levels are respected, this would remain a flat style correction. So that 3-3-5. So that's kind of what we're looking for, at least like in this, the longer term view. So what we're seeing here, in the chart. But that doesn't necessarily mean that this rally is really over. So suffice to say that the level that we're really looking for here is like that bear target 2. So if you see the other charts tomorrow, like just take a look and see where those levels are, because I've marked all of those at the 1.382 extension levels. So that's really that like kind of line in the sand where I would consider that the bifurcation point for the entire range that we see here on the chart. And that's, I think, the most important takeaway. Does that make sense? So it's kind of like we're just kind of not quite there, but maybe we won't hit there. Maybe this is it. Maybe this is the trick, right? So yes, you got a question?
Yeah, maybe not a question. I just wanted to mention that as you know, I'm leaning more bullish, probably in general. Luckily, that's been helping me since April, but I don't know if that was just luck or whatever. But in this case, I have to say, as much as it's crazy that it just jumped over the 200 and basically past the main volume, it's also in a sense very elegant, because now if we have a correction down or let's say a wave 4 down, and it would basically hold at the 200, hold at the major volume, and close the gap all at once. I mean, it's got 3 reasons to bounce right at the 200. Essentially, it's the gap, the volume, and the 200, right? Sure, if it doesn't hold, then I'm probably gonna come on the side of feeling like, oh, maybe we are in a bear. But at this point, it looks too elegant for me to think that that's not the case. I sold a bunch of stuff right around here, and I love everything, the value I get out of your service, because it really helps with the inflection point, even if the premise or the basic outlook is maybe different. It's still, I mean, it's you calling the right shots with, okay, this looks like we're moving the other direction soon, and so I'm really curious to see how it pans out once we head down there.
Yeah, this is I know it's kind of a nerdy thing to say, but this is where it gets exciting, guys. So like this is the fun part for my job, where so what you were saying about the 200, that was actually where I was going to go with the second bull scenario. So I think that's right on the mark here. So scenario 1 is we continue up this path, and if we reach this sort of 1.382 level, then it turns into more of a bullish. It could be like a 5 wave up. and then it performs just like this sort of situation was here, where we see sort of the same setup, where it bounced up. We had a B wave correction down, and then we had this big climb up the wall of worry here. We had a little bit of a scare, which might be kind of where things are right now. So I think this is a really good sort of like teaching opportunity where, just at least like through the thought process of kind of how I'm thinking it through, where if I draw another one of these fib levels here, you can kind of see that, it did hit this 138.2 level, and it kind of did this, it did this little bit of a wave 4, inverted sort of cup and handle sort of thing. But then we never really kind of got up to this, 1.618, and that's what kind of threw me off a little bit, where, we kind of thought that things were going to correct, because you see the volume kind of trending down here, right? And we're also seeing the same thing over here, but that's also, we had a big blow up, after we had a big blow up. So in both cases, the blow up came, it came early, for the Japanese yen blow up thing, but we still had this sort of 5-wave sequence here. And when I zoom out, what's like why I'm thinking that this is like a flat and not going to be an irregular flat is because of the preceding waves. So I do think that this is more of like a long-term irregular sort of pattern, rather than like a long-term wave 3, if that makes sense. And of course, we're only going to know this in hindsight, but just staring at 500 million charts throughout my life here, when you start to see something that looks like this, where it's kind of coming up at this one of those like theoretical maximums for like a C leg, then you start to see that resistance build, and that's where like I'm starting to pay attention a lot more. I pretty much live in these charts anyways, but hopefully it makes sense, where it's like the inflection point is right around here, and the fact that now we're seeing some sort of rejection, to me, that could either be where we maybe see like a handful of days, and to your point, Klaus, here, like this, you could see something like this, where we have support at that 200, and one of the things that you typically will see when the 200 is tested is volume. So when we did have this sort of gap up, I agree, it's very elegant, because you're right. There's three separate things that have a bullish case to them, but what you didn't see was volume, and that's where I get concerned, because you're looking at things like this, like in the past, right, where you see the 200 that's being tested, and you see just an absolute barrage of volume, and you didn't really see that at this time. And in fact, you saw a rejection at the 200, and the fact that it kind of got above it, and we haven't really accelerated. That to me, kind of screams that maybe things are going to take a pause here and make a wave 4, if it is going to continue up, if that makes sense. But the secondary bullish case is like, we could have a downdraft, and it might be a couple %, and that's not too bad. So 5 to 6%, but you could still make some good short profits off that. But if you don't want to short and you just want to wait, that's totally fine too. What's actually even better is you can wait out a drop like this. It's actually probably safer to do that, is to wait out a drop, and then once you have this sort of retracement and see what happens at the 200, then you can target something like this for you can target something like a wave 2 top, because it's going to be relatively obvious once you see big red bars pouring in, that kind of thing. Like that's typically a signal of at least an interim top. So what we saw today, kind of go a little bit into the weeds here. One second. So kind of what we saw today from volume perspective. So we had this auction, right? And for a handful of the reasons that I posted in the discussion channel earlier, all of a sudden now we have this big volume test, and then we had significantly elevated volume above like 30% throughout the remainder of the day. Now we did have this little bit of creep up here, but that's just normal, like people trying to buy the close, and different strategies that people are executing. What's going to be the big tell is if we see, like I want to see some sort of like a ending diagonal form, and then that leads into a bounce, because then that'll promote some strength. So as an example, let's say this is a B wave here. You'll see this at the beginning, couple of hours of futures, and then maybe you see some consolidation, and then tomorrow morning you'll see the bulls buy it up, that kind of thing. And kind of like something, kind of like it never happened. But you also got to remember that, everything is like give and take with the different wave counts. It's just a higher degree. So what I think we're going to see here short term over the next couple of days is you'll see this sort of like rounding top sort of thing. And what we're looking for is that climb up. So if I had to draw some waves on it, so if we had this sort of correction down here, which is pretty decent, you'll probably see it test this last little wave 4 down here. That's typically that's like the bifurcation point of whether it's like a wave 4. If it reaches the prior wave 4, then it sort of invalidates it, but it's not always often the case. So anyways, I'm trying not to be too technical, but the long story short here is that you could see a pattern like this develop, where then you see that slow, steady march, that 5 wave up, and then you finally hit that last little 1.382 extension level. So that's, I think, like the secondary bullish scenario, is that bears get a little bit of something to chew on, but then also too, the bulls finally, commit that last step, and you should see a lot lower volume on this last leg up. And that's kind of like your signal that, it's probably not going to last long. Now, I still want to be cognizant of, trying to oversell something that we don't know what's going to happen yet. So for right now, I think what a lot of people are thinking about is hedges, and like where to set some hedges. You can draw trend lines and things like that. I'm not a big fan of the megaphone pattern. So like if you draw something like this, and blah blah blah, like this doesn't really work so much. I'm looking for more of ending patterns, like the classic ending diagonal, or I think I drew something like that this morning, where I had this like ascending sort of pattern, and I was sort of expecting something like this, where we would have a small bounce and then maybe this last little run. But now, since that trend line's been broken, and we also broke the low that was made back on Monday the 19th, that's where I also think that you're starting to see more bear step in, because I guess that the progress that the bulls have been making has been waning. So I'll stop there. Does that make sense? Trying to show you guys like the two like bullish type scenarios, but we could have a big surprise and we could see continued selling. But in my opinion, the volume speaks louder than words. And when you start to see big volume spikes like this, to sell it down. And yeah, you did see some buy support here, but not enough really to keep it up as high as the bulls probably wanted it to be. So does that make sense? Questions about that before I go into the other charts? Does it sound like hogwash, a bunch of baloney, nonsense? Gains, what are you doing? All right.
So I have some questions about like the crypto market, and
Okay.
I don't know. I don't want to go a tangent, but it seems like it's decoupled.
Sure. Did
somewhat.
Anybody have like equity questions? We can get to that, Jake, for sure. Okay. Well, Jake, do you mind if I run through some of the other charts quick, and then we can spend some time on the crypto charts?
Sounds good.
Okay. All right. So let's go back to, okay, sorry, 1 second. Let me zoom out here to the daily. So you'll see a lot of the same sort of views where, now that we have this, candle down here for the day on some bigger volume, you're going to see, all the equity charts are going to look pretty much the same. So, I kind of talked through the bearish setup, right, which is that flat, the 335 pattern, and you're going to see that all over the place now with, something like that. So that's just the assumption. I'm going to update, the charts and things for that. Again, here's and I don't have like fib levels and stuff drawn on this just because, to the naked eye, right? Like it just, it kind of looks like a bad day. But a continuation of that's gonna, break some hearts. Small caps, yeah, they didn't even get to test their 200. So the big one though, I think is the yield. This is where things are going to start to get a little dicey. Longer term, you can see some patterns form up here, and this is why I'm kind of thinking that. I'm sorry, I do hate this megaphone sort of pattern, but if the shoe fits, I guess. But what I'm thinking is that, again, because inflation or tariffs are inflationary, you're probably going to see a decent run. And we had a bunch of people freak out up here when it was overbought, but we're not quite overbought yet. If you look at like the RSI here, that's the pink line down at the bottom, or red or whatever color it is on your monitor. We do have a point of resistance here at this 4.61, and it's tempting to take profits on TMV, but at the same time, I kind of want to let it run and see if the theory here is correct, because we could see something like this happen, and then potentially an extension, and that that'll equities will not survive long if this continues to go up. You'll have much bigger problems, systemic risk in the market that kind of creeps in after this. So that's why I think a good with the bond auction that went poorly today, kind of why it kick things off. Like everybody was watching the yield anyways and kind of saying, well, maybe if there's strong demand for treasuries still, maybe it's not so bad. But today's auction really kind of showed that the demand is waning for this. But again, not saying that everything's going to collapse, go to hell in a handbasket here, but it's a cause for concern, absolutely. So gold, real quick. Yes, you got a hand?
Hey, yeah. Could you show us where TLT would end if the yield does go up to 5%? And
sure can. 1 second. Okay, so let me, just helps to kind of redraw this. All right, so it's kind of coming up on that same test that we've already seen here with the 10-year. So we're kind of coming back up to kind of coming back up to where like the previous high was, and then the subsequent TLT low. So if we do see something like that, and there is a disconnect because this is the 20-year versus like the 10-year, but it's still relatively similar, right? There is a possibility that, you guys probably won't like this one, but there is a possibility that we see the same inverted pattern. I mean, yes, it won't map exactly 1-to-1, but there is still a potential here for for about like a 77.25 or maybe even lower, like 73.27. Let me draw this real quick. So this just reminds me of a very clear ending diagonal, where kind of the pattern just kind of draws itself. At the very minimum, you could see something. 1 second. Just want to add some contrast. I get to see my live charting skills. It's like doing spreadsheets live. I live for it. All right, so you would see a similar pattern on the opposite side. Do I think it's going to go that low? I don't know. I don't think anybody knows. But if it does go that low, God help us. But you're going to have a lot bigger problems if 20-year treasuries head that low. Than equity positions and things like that, because equities will probably already be 40% lower than they are today. If you do see this sort of action. So did that answer your question? Great. Okay. And I'll also once that gets a little bit more clear about like what the yield's going to do, we'll start seeing some more CPI prints and things like that. The Fed's dual mandate really does conflict sometimes with having low unemployment and then also low inflation. But unemployment's ticked up a little bit, so hopefully if the inflation gets back under control, and then we also see, price changes and things from tariffs roll through. And then, once we see how that works and what the Fed's going to do. So I'm thinking maybe like 3-4 months, Klaus, that we might get some sort of clarity on this. But I do think that long-term TLT is going to be an awesome pickup as long as it heads a little bit lower. Right now, I think it's just not a good buy-in right now. But I do think that longer term, this will be a really good hold, because if the yields scream up, then your dividend yield is going to be a hell of a lot better than it is today. So it's like you're waiting not just for a better entry price, but also a better yield that comes with that entry price. So it's like a double-edged awesome. I don't know if that's a technical term, but it is today, I guess. All right. Here, I'm laughing at my own jokes again.
No, thank you. That was really good to know. Yeah.
Good. Okay. So gold's kind of making a flag here. I think. I do think that metals is still continuing to be a good trade. It's kind of a goofy looking flag at this time, and it might turn into something else. Like we might see, maybe like a slightly higher high and then an actual decent dip. But then after that, we might see like it should kind of go in conjunction with the yield. So if the yield rises, they're kind of like polar opposites here, where the yield doesn't really sorry, I keep tripping over myself and my words today. I guess the overall theory here is people are kind of lacking a safe haven, where in prior times of stress they would flock to bonds. But now bonds aren't really looking all that good right now because of inflation. Before we had low rates and low inflation and stuff, and yes, it was reliable AAA, but the debt to GDP ratio wasn't always as high as it is today. So I think people are going to be flocking to metals and commodities. I've been chatting with Don about this. Things like soy. Here, I'll go to a different chart. I'll show you guys that chart too. Hold on. So things like it's a little bit difficult, because sometimes you guys can't trade, or like if you don't trade futures, it's going to be difficult to do stuff like soy and corn. But just to kind of illustrate the point here that long-term views of some of these commodities, this is why I'm kind of thinking that this is getting close to like a super cycle of commodities. We're kind of already in one. You've seen gold go bananas, but like soybeans, corn. Oil, I don't know if oil is really going to follow. Oil kind of follows the economy, where things are doing good, oil prices are up, and vice versa. Gas kind of trades on its own, but things like corn anyways. So hopefully that kind of gives you guys a little bit of context when I'm talking about the the commodities and where people are going to be placing some money. And if you look at like sectors, virtually all the sectors got creamed today. And if you're looking at something like XLF, which I'm patiently waiting to collapse into, the darkest pits of Hades so I can get out of one of those trades. Hey, it happens to us all, right? But if we do see some sort of irregular, this is a pretty likely path that we could see develop with something like this. But anyways, like you'll probably want to look for like biotech. Biotech's, even though it's down, it's still, sorry, these are old chart updates. Biotech could probably make definitely another test on this trend line, but it should continue to ascend after that. It's just kind of making some weird patterns right now. If you want to try to look at some other more safe sort of things, like materials is kind of on the upswing here. You've got industrials, which is screaming up higher, but that's the train's kind of left that station. But anyways, just kind of wanted to give you guys show that real quick. You can show oil here. Oil, sorry, contract adjustment. Sorry, I'm having a conversation with myself. Okay, so adjusting for that, it's just kind of a big flag at the moment, or a big like symmetrical triangle. And like I said before, I do think that you'll see lower oil prices if we do have higher yields, more pressure on the economy at large. You're just going to see probably look for some headlines that talk about strategic petroleum reserves that are being released or something like that to kind of ease the pain of the economy. Like you always typically see that when you get big price shocks. Yeah, we do have some longs that are trapped up here. But it should be another hurrah here before, we do get some serious stuff that can happen. Plus, we could also take the short hedge and add some more, or add a couple more units to the long trade. And then, it's not so bad to be able to get out if there's like a 50% retracement kind of thing. And I will be adding some like hedge levels and suggestions and things like that on the charts. I keep forgetting to do that. It's my fault. I apologize. Please don't let me forget. For gas is still in its bullish cycle. It kind of clears up right around like mid-February. Hold on, I gotta adjust this chart too. Jeez, do your prep work, gangs. So this is just kind of following up a channel here, which is why I'm not really concerned too much about oil, retreating over the last couple days. I mean, it had a really good day yesterday, and then we had a little bit of retracement today. But overall, I still think that it's probably going to do, one of these things where that's like our cycle top. I don't really know if it's going to head this high. I don't think there's enough demand right now. I don't think we've had enough, crazy weather to really justify that. And plus, we're all this is a time of the year where they're just building up stocks. So I don't know if this is actually a good projection for what it's worth. SOX, this one has been super fun to watch go against me all the time. But this one I do feel like has a pretty clear head and shoulders on it. And what we saw over the last couple of weeks and months here has been really just a steady kind of decline. And I'm not surprised that we saw the volume that we did with SOX here, just because it had been beaten up so bad and kind of pierced through a lot of different, major fib levels. So there should be a lot of support right around this, this 50 here, like at this 188, and then down here by the 170. I did add a SOX short, I want to say yesterday, but I don't really want to hold it all that long. I just don't know what's going to happen with semiconductors yet. And I think there's a lot of uncertainty with, Taiwan and China and all those other economic things that are going on. So, how it goes. One tweet can destroy a portfolio. So, all right. So, without any, let me show you guys. Yeah, the quantums are taking a hit too. Just kind of like everything else. That's really good for the calls. Let me show you MSTR.
Hey,
Yes.
Sorry to interrupt again on the SOX stuff. You said you're not likely to hold. You bought SXOS, right? SOSXS.
Yes.
Because I did too, and I was wondering if I should hold until the gap closes, because it's another, decent percentage down.
Yeah.
Or if I should just take the gains and I'll have cash to put in longs if I want to later. But
Well, I think SOX is going to be a really good hold because you're right. It does need to fill this gap. So what I'm planning on here is something maybe like this where we get a small bounce, but I want to make sure that this range here is actually going to hold first. And I kind of I'm kind of treating it like an instrument I want to trade back and forth, like with Soxel and SOXS, just because it's pretty popular, with a lot of the Sestrian folks. And I don't want to hold it longer term, like the financial sort. Well, I got to get out of that, but I don't want to hold it very long just because of the trading service. So I want to, but for an individual portfolio, like let's say a 401k or something, yeah, I mean, I'd hold on to that. I mean, I have it in my 401k, and I've been patiently waiting through some drawdown, but I still was only still just added not too bad, but before the gap. So I mean, if you're holding down here, it's probably not that big of a deal, just because you should see a decent retracement. In a perfect world, we'll see we would see some sort of like ABC down and test the 786 retracement level, and then maybe we see a bounce up. I'm just not sure yet. And it kind of depends on if Nvidia keeps rocking earnings, and we should see that next week. And it kind of depends on that and like the different stocks that comprise that. Like if they're starting to show weak earnings and their PEs aren't really justifiable anymore, then we'll have some problems. But for now, I'm just going to try to keep it until it closes the gap and take the profits, and then just try to kind of play the hedge pair back and forth. It just kind of seems like people like to follow those two. So that's at least just my opinion on it. But longer term, yeah, I think it's a sell.
Cool. That's helpful. Thanks.
Yeah, no problem. So sorry, I'll try to go quick. I know I'll talk a lot. So MSTR, we're starting to see some cracks here in the armor. What I expect to see first, again, because this does still kind of look like an irregular flat. It kind of looks a little weird, but overall, it has like a short C leg here, and then kind of has this other ABC up. Like I mentioned yesterday, I think it's possible, and Jake, we'll talk about Bitcoin in a hot second here. I think it's possible if Bitcoin keeps running up like crazy that we could see a move up like this, maybe like a slow grind up, but that's just because of the assets that they hold and not necessarily because it's a great company to own, right? So, I mean, if you look at these earnings, I mean, it sucks. I mean, there's no other way to put it, right? I mean, but still, they own assets that are appreciating, and that's really the whole crux of the argument here. So then if we zoom in, you can see my gut is saying we'll have a retracement and we'll be able to get out of the SMST shorts. I think longer term, it's going to be still a pretty decent trade. It just kind of went against us, especially when kind of thought it was topping up here at like a major level at that like 400. But now it kind of looks like a head and shoulders. And what I'd like to see is a breach of this trend line here. And then I would like to see a bounce below it. So what I mean by that is I'd like to see something like this, where it fails a retest and heads back down to this level of support here, right around like this 350. And that'll definitely make the SMST shorts profitable. So I may close them out or reset or whatever, because the position size is pretty large, but there's a reason for that, just because I want to try to get out of it now that it's gone so far in the other direction. Let's do Tesla real quick. Tesla is not looking good. Even though it doesn't look like it much right now, you still had a lower low, and you're starting to get that concentration of red there, that concentration of selling. So you see two buy spikes that we had up here in a 2-hour increment, and you saw high volume reject the second one, which typically means that, all right, you're done, right? Or like it's done for this current bull cycle. So if you're holding TLSQ or TSLQ, if you're holding that, I'd say just be patient. You're probably going to see lower prices soon, and all ships rise and fall with the tide. So to kind of tie it back in the beginning part of today's broadcast, right? We're thinking that there's a couple different scenarios that could set up here where we have, let's say, a shallow pullback and then maybe like a wave 5 or something. I don't know what to expect with this. I think that it's at the 50% level for a reason, and anything higher needs to be justified by higher equities in general. So we're talking about higher Nasdaq, higher S&P, and they're already pretty high anyways, pretty close to the like all-time highs. So having a bounce like that and having Tesla only appreciate up to the 50% retrace for the whole range is it's still kind of an indicator of weakness. I still think that their market cap at 1.08 trillion is not really. It's still they got to really start printing some money. And they got to start making some sales. So if those trends reverse, then we should start to see some better outcomes here for the longer term Tesla price. That's just my opinion. I know other people, I know Yemen's very bullish on Tesla. He's talking about like 383 and maybe slightly higher than that. But I need to see more participation from the broader market. And as of right now, I'm seeing the same thing I'm seeing with regular equities, which is just slightly declining volume and just strength declining overall. Let's look at NVIDIA real quick. NVIDIA is kind of just holding water right now until earnings. They're probably just going to consolidate up here and not move much, which is kind of why I'm thinking that we might just see like a little pullback with equities for now. And then, the earnings might kick off that wave 2 or B wave or whatever, where it can hit up this 139 price level. I think it's, reasonable. I don't think it'll hit it right on the nose, but should be relatively close. All right. Any other questions before we switch to the last one for Bitcoin? All right. So for Bitcoin, this guy, let me go to a different chart. So Bitcoin has been kind of defying gravity. When I was saying, okay, Bitcoin's stalling out here, that's just because it looked like a very solid 5-wave sort of pattern. Now what's starting to kind of materialize here is that might not be the case at all. We might be seeing like a truncated sea leg, or maybe just maybe this is just drawn wrong. Maybe this was an irregular, but the point is still, this sort of flat looking thing here. Highly likely it's gonna. I mean, it has already kind of turned into an irregular, but the trick is to kind of figure out where it's going to stop. So you could see one of these things where this was just a B wave, and you see a much higher Bitcoin. And the reason I think that this is possible is because of the flight from bonds, really, and then if equities start to really take a dive, well then this is very clearly, at least in my opinion, a really clear ABC setup where you can see the smaller little increments. Oops. You can see these smaller little ABCs within. So that's where I wanted to try to just prepare others for the possibility. And of course, MSTR is going to be impacted as well, but I still need to see more participation from it if it's going to ascend like this. Typically in a regular, I guess, I'd say half the time it stops at like this 1.236 level. But it could extend up here to like this 1.382. However, if it does that, so like, BITO is going to be a good play for that. But if it does that, what we could see after this sort of irregular move is actually a very big correction for Bitcoin. That's just kind of how it goes with this sort of pattern. And I think that like irregular patterns like this are, I think, one of the most reliable patterns when it comes to technical analysis for just wave counts. So yeah, I do think if it does get up to this like 122,000 kind of thing, and let's say Bitcoin's the only one standing tall at the top, and you got gold and stuff like that, well, you're gonna have a lot of a lot of nervous people that are holding Bitcoin as it ascends. I mean, some people are just lifers; they want to hold it because it's it's very expensive right now. But in the grand scheme of things, everything needs to correct eventually. Do I think it's going up to 1 million? No, whatever. But still, I mean, how many times have you thought something and been sure of it, and then all of a sudden it just doesn't happen? Like when you immediately click buy, or when you click buy and then immediately goes down, right? So that's kind of the concept here, is that Bitcoin, I think, is going to be one of those backup options for like a safety trade, just because it hasn't made new lows, and the chart doesn't really look like it's weak. So hopefully, Jake, if you have specific questions, I'm happy to answer those. But I think that if and when equities do take a dive, we should see Bitcoin follow, but probably not right away. I think that you're going to see a lot more of that safe haven sort of trade first, where you get more of that euphoria. Crypto's going to save us all. Bonds are junk. Let's buy some computer code, that kind of thing. People don't like that when I say, crypto is just computer code. They get all upset about it on the social medias, but yeah, tomato, right? I'm an old school guy. Like, I want to hold a bar of gold. It's probably why I got one behind me, even though it's big. All right. So, Jake, do you have specific questions about that, or anybody with those sort of comments? Okay. I will assume that I have just nailed it yet again every Wednesday, just nailing it. I mean, I'll be honest, guys. Like, I'm a little happy that some of the pressure has been taken off of, like equities in general. I think that, like, in my opinion, one of the most difficult things to trade, and I don't know if you guys will agree or not, but one of the most difficult things to trade is constant up and having to chase, because most people, like, if anybody has held longs all the way from the bottom, like, you have truly proven yourself the master sensei trader, because if you buy and hold these sort of things, like, doomsday prophets, like myself sometimes, you probably would have taken profits at some of these different clusters around like the 200, moving average, those types of things, where rational investors would have, investors and speculators would have taken profits. But when you see gaps and stuff like this, usually it's just covering and some of the tricks and stuff that bulls can play to to really offset some of the things. Or it's it can be like a dealer driven gamma squeeze because they need to go rescue whatever position. You don't know what's going to happen. But the long story short of it, though, is I'm pretty relieved that we're seeing at least a little bit of pressure taken off, because you can chart waves. But the difficulty of picking a top or picking an endpoint is really where I see some of the risk. So now that there is a little bit of a pullback, it should be a good thing for markets, because markets do need that to stay healthy. So hopefully that makes sense and kind of resonates with you guys. Christian, your comment about the wild swings of Bitcoin, yeah, I can see it. I could see it happening like that, but of course it won't happen all in one day, but it just scares the crap out of me when there's a 12% move in like an hour for Bitcoin. And I mean, it's a miracle it got saved, but I don't want to own it. I'll chart it all day, but I don't know about it yet. I'm waiting for something that's a little bit more tied to like an asset, like a stable coin or something like that. Something that's maybe backed by some physical assets. I just I think about it like COVID, right? So like Carnival Cruise got hammered with COVID, and they had lost 95% of the revenue, but they still had cruise ships to sell. Like crypto, I mean, if nobody's adopting it, nobody wants to use it, nobody has money to buy it anymore. It's just because they're all losing their jobs, that could be a catalyst for a sell. So anyways, I'll stop talking. I actually do need to run anyways, but I think I have time maybe for like one more question, or else we can wrap for the day. All right, I will take silence as compliance. All right, everybody. Well, thanks a lot for joining today. I hope these things are valuable for you, and I hope that you guys who are holding some shorts and underwater and stuff are getting a little bit of relief. We'll see what happens here. I'm kind of thinking that I might take like a hedge long trade if we do see like a wave one drop, at least for some scalper or something like that. But I kind of want to see what happens at the 200 daily moving average first, because I think Klaus, you might be right, where there's a big bounce or something like that. And even if it retraces 61.8% or whatever, that's still a pretty nice gain. So we can do both sides. We don't have to be picky. All right, guys. Well, have yourselves a wonderful afternoon or evening or wherever you are in the world. All right, guys, take it easy. Bye.
Take care.
Thanks, man. Ciao.